Howdy, I hope you're having a great day. Silver Trade here again with another video. Today we're going to be talking about GameStop's newest $8 billion investment. Banks are buying and the lines are long, 7.3 billion cat errors in one day, and did Ryan Cohen just drop a hint? But please remember, none of this is financial advice, we are not financial advisors, and this video is made for entertainment purposes only. Back on June 11th, Ryan Cohen reposted this, "What if after all this, Ryan Cohen really just is regarded?" Ryan Cohen reposted this, nobody really thought anything of it. Recently, people realized that this gentleman's name was Buy More GameStop. Could this be Ryan Cohen's subtle hint to shareholders? And last week, they shorted 66% of GameStop's 2x leveraged ETF. While at the exact same time, GameStop's short interest jumped up to 19.5%, levels we haven't seen in a very long time. And then over the weekend, right after this, the DTCC swaps data website is once again unavailable, down the entire day. How strange, we have banks failing and swap websites down again. Probably nothing, right? And a couple of people remember it being down a week ago as well. Mainstream media wants you to forget about GameStop, but nobody is, and the lines are staying very nice and long. People are buying Pokemon cards from GameStop like crazy, then they take them back to GameStop to get them graded, and now there's rumors that the Push Start Arcade is going to be GameStop's website for people to play with those Pokemon cards as well. GameStop's utilization is at 73.19%. And GameStop's IV or implied volatility is at 54%, which are some ridiculously low levels. I mean, GameStop's 52-week average implied volatility is 84%. And now we're at 54%. And GameStop is now coming to the end of a year-long wedge. The blue diagram line was drawn by me, OP of this post. The bottom line of the wedge is 78.6% Fibonacci retracement. If you don't know what it is, here's a brief ChatGPT summary of it. The 78.6% Fibonacci retracement level is a deep retracement. It comes after the 61.8% and the 0.5 levels. It's derived from the square root of the golden ratio. There is so much more to be said about the Fibonacci sequence than we have time to go over. It's used by many traders as a last line of defense before a full retrace, price returning to the original move. Basically, it's the biggest support line before we go back down to about $10 per share, which is now pretty much impossible since we have about $9 billion in cash. The last time we broke the wedge this big was in May of 2024, which was the last sneeze. No hype dates, but he's predicting a large move from late July to early August. And we've gone over this multiple times, but Roaring Kitty's 5-year anniversary is on July 19th. That's when he posted his first video in 2020. And that 420-day cycle we've talked about also comes due around July 11th. So there are a lot of tinfoily things pointing to mid to late July. Well, and the American flag and microphone from Roaring Kitty's emoji timeline. People have always thought that it might be July 4th. And when prices are this low on GameStop, even Goldman Sachs themselves had to pick up a few more shares. They just increased their position by 33%, buying 65,000 shares, worth almost $6 million. And now we talk about GameStop's newest investment. But really quickly, if you wouldn't mind, please hit that like button for me. My last video had a ton of downvotes, and I would really appreciate it if we could get a good bit of likes on this video to help with the YouTube algorithm. But either way, thank you so much for being here. But seriously, if you could, it's just right there. What doing, GameShire-Stopaway? JP Morgan Trust files prospects listing GameStop Corp as a 10% record holder of the fund. The funds holding are interesting, to say the least. A money market fund is like a fancy savings account where GameStop can put a bunch of cash in there, and with that cash in there, they can collect 4.76% interest yearly on it. And it's highly liquid, so they can get their cash out of that whenever they want. But total assets for the fund is about $85 billion. Right here we can see GameStop has about 10.4% of that, so we know they have a little over $8 billion inside of that fund. And if they had $8 billion in there getting paid at 4.76% interest yearly, that one investment is generating GameStop $380 million per year just in interest income. And it's very liquid, so they can get their cash out whenever they would like. So don't think that they're just throwing their money in there and they don't have a plan with it. The bottom line is GameStop is now a profitable company, and with this new $8 billion investment, they're going to be generating an additional $380 million per year. Crazy to think about. The GOAT, Ryan Cohen, and the power of direct ownership. Cat Air data came out today, and immediately we noticed 7.3 billion cat airs on June 17th, the same day GameStop completed their $2.25 billion convertible note offering. To understand what happened, we must look backwards, specifically C plus 35 days back, which would bring us to May 13th. On May 13th, there was a lot of XRT creation and ETF borrowing went through the roof, which altogether signals something was going on behind the scenes. To figure out what, we look backwards again, C plus 35, which brings us to April 7th. On April 7th, Cohen filed a Form 4 indicating he took direct ownership of his 37 million shares, when Ryan Cohen's shares were previously indirectly owned. So on April 7th, Ryan Cohen did the Form 4 indicating he took direct ownership of his 37 million shares. 35 days later, on May 13th, activity on ETFs known to have relevance to GameStop went nuts. Keep in mind that we have confirmation of T plus 35 failure to deliver cycles evidence from GameStop Corp, which says the longest possible ETF can kick is 35 calendar days, aka T plus 35. AP sells ETF shares which have not yet been created in the primary market. The AP has the following options or a combination of these options. They can either create ETF shares and close positions, borrow from another market maker and cover, buy shares from open market and cover, or they can decide to wait, for which results in failures to deliver. If AP does fail to deliver at T plus 3, T plus 6 is the last standard day to close out the position. And then after that, T plus 35, the additional rule 204 provides an extended period of up to 35 calendar days to close out certain FTDs. C plus 35 later on June 17th, there were 7.3 billion cat airs, and GameStop completed their $2.25 billion convertible note offering. And remember, last time we saw 7.2 billion cat airs was May of 2024, when GameStop ran 500% over the next 35 days. And this is how cat airs normally affect GameStop once they get released. Pretty weird how we haven't really seen much price appreciation since we had 85 billion cat airs back in April, but I'm sure they can only kick the can for so long. Here's how price appreciates C plus 70 days after we see a large report of cat air failures. After the April 85 billion, we did see 70% increase in price, but we'll just have to see what the future holds. GameStop can now deploy that capital in whatever way they seem fit for the benefit of GameStop. Ryan Cohen takes no compensation from GameStop, so his interests are directly aligned with shareholders. Also, it would be pretty clear that the $2.25 billion interest-free loan is basically an exit for qualified institutional buyers, cough cough GME shorts cough, who have decided to flip sides. The exit fee is a large interest fee loan to GameStop, which raises the stock price floor, benefiting all shareholders. You may recall a lot of discussion about arbitraging the convertible notes. Arbitraging a note is not an exit for note holders because the notes may or may not actually provide shares tomorrow. Remember, a key feature overlooked by most people is that GameStop decides at its election whether the conversion is by cash or by shares. So it could be cash only, shares only, or a combination of cash and shares to pay back those notes. Long story short, GameStop short sellers wanting to exit must trust GameStop and Ryan Cohen to convert the notes into shares. The ultimate trust me, bro. And thank you so much if you've made it this far in the video. I really appreciate it. And hey, since we're already 10 minutes in, if you wouldn't mind, please leave me a like. I just did a poll, and we had 21 votes. And I asked, should we talk about GameStop and AMC or just GameStop? Just talking about GameStop barely won by a sliver. So we're going to talk about one tiny little detail with AMC that you don't know. A tiny detail that one of my genius subscribers recently pointed out to me. But I just wanted to let y'all know my honest opinion. Everybody else is going to lie to you and tell you what you want to hear, so that way you keep coming back and you keep liking their videos. But I want to be honest with you, even if it hurts my channel. And so please don't hurt my channel for it. Adam Aron joined AMC Entertainment as CEO and president as a member of the board of directors on January 4th, 2016. 2016, right? Turns out Adam Aron from 2006 until 2015 worked as a senior operating partner at Apollo Management. And then right after 2015, obviously, comes 2016, when he became CEO of AMC. So Adam Aron has strong professional ties to Apollo Global Management. If you've never heard of Apollo before, please look into it just a little bit. Typically, they do a thing called loan to own. It is when a firm like Apollo lends money to a distressed or highly leveraged company, but the loan terms are structured in a way that if the company struggles to repay, Apollo can convert the debt into equity or ownership of that company. Or they take control through a bankruptcy restructuring. It's essentially a backdoor to owning the company, especially useful if the firm believes the business has long-term value but is just temporarily in trouble. And I'm not trying to be a bear here, and I'm not trying to spread FUD. I'm just trying to show you some facts. Look, he worked from 2006 until 2015 as a senior operating partner at Apollo. And then in 2016, he joins AMC. And just as an example, you remember us talking about Wolf recently, right? And now they're declaring bankruptcy, Chapter 11. Apollo Global Management is playing a major role in forcing Wolfspeed, or Wolf, into a restructuring that would effectively give Apollo and other creditor firms control of the company. Pre-packaged Chapter 11, Wolfspeed has struck a deal with Apollo-led creditors to file a pre-packaged bankruptcy. This means creditors have already agreed to a restructuring plan, cutting billions in debt before the company formally enters Chapter 11. They aren't shutting them down. Instead, Apollo is engineering a debt overhaul via bankruptcy to take control of Wolfspeed. Wolfspeed will continue operating, but under the custody of its creditors. The current shareholders, however, will lose most of their value. On my last video that I talked about AMC, I got an absolutely ridiculous amount of pushback for my opinions. And so I've been heavily debating if I even want to talk about AMC ever again. Please let me know down below if you like my no BS opinion, and we're just going to have to see how this video turns out. I hope you found value in this. Thank you, and God bless you.